Hey, Bulls and Bears, it's Wednesday, April 27th, 2022. The economic support is being yanked, and we're definitely seeing it in the markets. We're going to talk about the markets, but we also have a lot of other important news to get caught up on: the supply chains, the state of the U.S. consumer, and also traders, retail investors, also known as mom and pop investors, people like you and me. Over the past year or so, most people have gotten killed in the markets. A lot of new traders jumped over to these trading platforms, especially Robinhood, Webull, and others, and tried to play their hand, so to speak, at investing and trading. And most people did not turn out as winners. We're going to talk about that. But first, the economic support being yanked out from under the markets here. The markets are in the green today as I'm recording this, but I called this top a few months ago when we started seeing this pattern. Let's take another look at it. Now, to start off here, we're going to take a look at the Nasdaq. Now, the Nasdaq is at its lowest level since late 2020, right? So we're at about an 18-month low. Now, take a look at this chart, and you can see the significance of this latest decline from a high of about 15,005 down to 12.6. And we started seeing this topping pattern several months ago. Let's bring it into a 5-year chart. And instead of seeing higher highs and higher lows like we've seen over the past at least 5 years, we saw it make this high back in December of 2021. And what did we see after that? And we talked about it right when this happened. We talked about this in February and March. It went down. It didn't go back and beat those higher highs. It didn't regain or go on to new highs. Instead, we saw it go up, drop back down. And my feeling is the next run or the next increase in the stock, it's not going to beat the previous peak there of 14,220. Now, we'll have to keep an eye on it. Anything can happen. The Fed could reverse course. They could start buying more bonds, more securities. They could drop rates back down. But if the Fed keeps what they're doing, if they keep up what they're doing, this is a top in the markets. In my humble opinion, please let me know down below. But if you were here on this channel in February, March, even late January, we started noticing this. And am I right on the 18-month thing? Yeah, if you go back, the last time we were in the 12.6 range, 12,600 was, October, November, December 2020. So 18-month low on the Nasdaq. And also certain sectors are doing especially bad. Look at the tech stocks. Stocks, even the parent company of Google took a big hit with their earnings. Stock went down. Earnings came in lower than expected. We were talked a couple reports ago. Even oil executives are dumping a lot of stock right now. So something's going on. Could there be something else out there that nobody sees or that only the people at the top know? Or is it just the fact that the Fed has vowed to continue increasing rates to reduce their balance sheet? It could just be the talking out of the talking heads that have the markets in fear. All right, but you also have to factor in the low savings rate now. Personal savings for U.S. consumers has plunged now to more than a 5-year low, which a lot of people are scratching their heads because the unemployment rate's low. And it's good that they're scratching their heads because people are finally waking up. A lot of people are realizing that, hey, this unemployment number doesn't make any sense. We're 3-something% unemployment. Why is the savings rate plunging? Why are people having to get under more debt just to get by? People are running up their credit cards now like never before. And this rude awakening is just beginning. I think it's going to get a lot worse before it gets better. And prices are continuing to rise. Let's take a look at what's happening over at one of the biggest shipping ports in the world. And it's not a pretty picture. Actually, somebody down in comments linked to this. So thank you very much for putting that down in comments. I went and checked it out. And I'm going to bring up a live visual now of the shipping situation here. Let's take a look. All right, we are looking at maritime traffic in one of the biggest shipping ports in the world. This is Shanghai, China. And if we look at the chart here, we see the ones that are in motion are more of a rectangular shape. But you look out here to sea, and we see that the dots represent ships that are anchored. They're just sitting, they're waiting because all these shutdowns that are happening right now in Shanghai. And this is going to take many, many months to get caught up on. And let's see if we can zoom in a little bit here. And you can just see the magnitude of all these cargo ships just sitting off the coast of Shanghai. Now, some of you may say, oh, this is, doom and gloom. This is fear. You're trying to scare people. No, this is a real live chart of all the ships off the coast of one of the major shipping ports. Now, also, some of you have mentioned the fact that you go to your retail store, you go to the grocery store, you go to department store, Walmart, where a lot of things from China are sold, and you say, well, there's some empty shelves, but it's not that bad. Most things are in stock. And yes, I've noticed that too. Now, retail stores are not complete idiots. So they're not just going to let the shelves get cleared out. What they're going to do is they're going to raise prices to try to dampen some of the demand. So are they going to keep prices low and just let people buy up all the stuff and let the shelves get emptied out? Of course not. They're going to raise their prices. And if they see a certain item is getting lower and they don't have it in stock or in backlog or on order, then they're just going to raise their prices because they know that the demand is going to be much higher with less of the product out there. Here's one example. And here's a water bottle. Here's a water bottle that I usually get at Walmart. Used to be under $8. Just checked last night. I was just at Walmart last night. I had to get some chicken wire to put around some plants I'm growing. And these are about $12 right now. So from $8 to $12, it's a $4 increase. And this is just in the past year, because I bought some of these at probably the middle of last year for around $8. So that's a 50% increase, right, from $8 to $12. And that's just one example. So of course they're not going to sit there and sell out of these things and have empty shelves when they can just raise their price. And that's what you start seeing when there's shortages. Shelves just don't go empty like that. But retailers are going to continue to raise their price when they see the items getting lower and lower and lower in inventory. And yes, ultimately you may see empty shelves. But for now, if you look at your stores, it doesn't look too alarming just looking at the shelves and what's in stock. But when you look at the prices, it's pretty alarming. And a lot of people are having a very difficult time right now. And that's why you see credit card debt really stacking up here like never before. And what's happening over there with the shipping situation there, Shanghai and that port, it's going to have major impacts because everything is slowed down both in and out. And people are out there saying that it could take 6 months to a year, even when things are moving again, to get fully caught up. So expect these rising prices and these high prices to stay where they're at and possibly go higher. Now, you may see dips like we saw oil come down. You really didn't see too much relief at the pumps, though, did we? Let's take a look at what happened when oil dropped below $100 here recently. Now, today we're back over $100. It did dip below $100 just recently, and we've been seeing this up and down, kind of a holding pattern, really. Not getting higher with the highs, not getting lower with the lows. So we're going to see a breakout to the upside. In my opinion, I really hope I'm wrong. I hope it drops. But did this drop that we saw from the peak when we went up to about 123 per barrel, did that translate into lower gas prices with gas now closer, with oil rather, closer to $100 per barrel? Well, let's take a look. And we'll start off here with just the national average. The national average reached a high of about 434, down now to about $4.11. So not a huge noticeable difference there, about 22 cents a gallon drop from the lower oil prices. And it's weird saying lower oil prices when it's still about $100 a barrel. But the bottom line, the message here is get used to these elevated prices because there's not much relief in sight. Let's take a look at what's happening with the everyday investor, the mom and pop investor, also known as the retail investor. People like you and me, not corporations, not hedge funds, not professional investors, not banks, but just people. Well, we did see a lot of people very concerned about the rising cost of living, and they decided to dip their toes, let's call it, into investing and trading. And with the popularization of apps like Robinhood and Webull, more people took their first shot at trading, and a lot of people now are learning about options. Now, I've been trading options for years. I've been doing pretty well over the past couple years, but newbies are out there and they didn't do very good. Overall, mom and pop investors took $1 billion bath, basically huge losses. But if you're an amateur and you don't know what you're doing, or if you're impatient, or if you don't have a strategy, you're going to get hurt, because there's algorithmic buying and selling happening with these big trading firms, and they know your position, they know how much you have on the side, and when they see a bunch of little investors jump into a stock, they're going to dump it. And in some cases, there's something called a pump and dump. Well, they'll pump the price up. A lot of people will rush into the stock to try to make some gains, then they'll go ahead and dump it. And there's a lot of bag holders, and most of the bag holders, 90% of the time, most of the bag holders excuse me, are your retail investors and a lot of newbies. And over the past couple years, especially with the work at home craze and just the rising costs, pushing people into their trying to be their own financial advisors, people are taking big losses. All right, and this is out of Bloomberg via Yahoo here. Of all the risky things amateur investors did while locked at home, dabbling in stock options was one that veteran investors were convinced would end badly. Well, they were correct, and that was pretty obvious. Even a few months ago, we talked about how the personal savings rate had dropped. And yes, people are getting some pay raises, but it's nowhere near keeping up with the cost of inflation. So this has people looking more towards trying to make extra income and investing, and most people looks like are not doing so well. And you're competing with multi-billion-dollar companies and investment houses. So good luck and be careful out there. When I say be careful at the end of these videos, be careful all around. I mean, personally, safety, but also financially, you got to be very careful with your money, because there's a lot of sharks out there in the water ready to pounce on these newbie investors. Another recent report, U.S. home sales post 5th straight month of declines. Again, no surprise. We have all of these shortages. We have homes that are just sitting there half done, in some cases 3/4 done, in some cases 90% done. And in many cases, they're just missing items here and there, like garage doors. We saw a several month backup in garage doors. With what's happening at the shipping ports, obviously that's not going to turn around anytime soon. It may for some items, but you're still going to see shortages in certain items. All right, but also the rising mortgage rates are dampening demand. But considering the shortage and just the number of people looking to get a home, combined with these institutional buyers, expect to see sales continue to drop. Prices, not so much. Now, there's a couple cities we're keeping an eye on. Boise, Idaho could be one of the first cities where we're going to see prices drop. It's not going to crash. Housing markets typically don't crash. Even the 2008 bursting of the housing bubble, that took several months to play out. In fact, it took a couple years to get down to the bottom when we finally saw a bottom. And of course, we know that market was essentially rescued with rate cuts, and something similar could happen this time. Could they allow it to come down? It's likely. Could they step in before prices make any significant correction? Of course. You can't predict the manipulated market. Who knows what they're going to do? But the NAR said signed contracts fell over 1%, 1.2% to be specific, and that's the lowest level since May 2020. Mortgage rates up over 5%. It's going to get very interesting when you have these supply shortages, very slow building of homes, combined with rising mortgage rates. Get ready for the mega corporations to come in and buy a lot more homes. That's what I think is going to happen. And you're going to see rents continue to skyrocket. Homelessness continue to go up because of this. And more people getting buried under debt. And the bankruptcy storm is around the corner. I think the second half 2022. We're going to start seeing that play out with rising bankruptcies and more people being forced to sell their home because of the rising cost, the rising carrying costs of just the property, the rising taxes, the maintenance, the utilities, combined with this plunging savings rate. Pretty bad. Bad things are coming. Bad things are coming. Hopefully you're doing well, though. You know, information's power. Knowledge is power. So continue to brace for what's coming. Keep stacking. And please like to hear from you down in the comments. What do you think about all this? One, the retail investors getting hammered with $1 billion loss. The marine traffic over there in Shanghai. What does it mean for the supplies? I think we're going to see more rising prices, kind of like this water bottle right here, 50% increase even at Walmart. The dip in oil price, well, we saw about a 20-something cent drop per gallon nationally in gas. Did that really help out much? Doesn't look like it when you look at the savings rate. That's it for now, people. Thanks for being here. Peace.